We've talked about dividends in many of our previous videos, but are they actually a good investment? There are countless articles on the internet promoting the merits of earning money without doing any work at all. However, many of them aren't genuinely passive income sources if you examine them closely. Even though they'll provide you with a consistent stream of revenue while you're doing other things, you'll still need to put in some effort to make it work. Blogging is an excellent illustration of this. True, once it's up and running and generating a continuous flow of revenue, it can produce a lot of money. However, it takes a lot of time and effort to get a blog to that stage. And even once you've done so, you still have to deal with it in the future. It's at best a semi-passive source of revenue. Although it's a great source of income, this one isn't entirely passive. Welcome back to Capital Finance. It's entirely possible to earn $1,000 from your dividend investment. So in this video, I will show you how to do it. But before we do that, I want you to like this video and make sure to drop some comments in the comment section below. Now, let's dive right in. It is possible to raise your income without putting in any more work by making money while you sleep. But there is a limit to how much work can be put into passive income. Some initial effort is required, but not at the level of your day job. An additional source of income may either speed up your financial progress or allow you to set more ambitious targets. If you're just starting off, it may take you a while to reach $1,000 a month in dividends. Providing you don't need the money right now, you can let the dividends accumulate up to $1,000 each month while acquiring further shares if you don't have any immediate expenses to cover. If you want to earn $1,000 a month in dividends or any other amount, here's how you may do it. But first, let's figure out how much money do you need to invest to earn $1,000 a month in dividends. This may come as a surprise, but a dividend income of $1,000 per month requires an investment of $342,857 to $480,000, with an average holding of $400,000. The dividend yield of the companies you choose determines the exact amount of money you'll need to invest in generating a monthly dividend income of $1,000. What is dividend yield? Invested money yields a profit in the form of dividends, which is called the return on investment or ROI. The dividend yield is computed by taking the yearly dividend per share and multiplying it by the share price at the time of the dividend declaration. You'll get Y% of your investment back in dividends. To speed up this process, you should look for normal stock yields of 2.5% to 3.5% before looking for larger yields. Obviously, this was before the global crisis of 2020, so the range may flex as the markets continue to move. You'll also need to have the financial ability to begin investing in the stock market when it's soaring. Consider a 3% dividend yield and quarterly stock payments as an example to simplify the discussion. 4 times a year is the typical frequency for dividends to be paid out. You'll need a minimum of 3 different stocks to get you through the entire year. To make $4,000 a year from each firm, you'll need to invest in enough shares. To figure out how much money you'll need for each stock, split $4,000 by 3%, which gives you $133,333. To get a total portfolio value of roughly $400,000, multiply it by 3. Especially if you're beginning from scratch, this is a significant investment. But wait, it doesn't mean that the company has a high dividend yield that it's a good investment. By shopping for dividend-yielding companies, you may assume you may cut down on your investment and shorten the process. Though theoretically valid, dividend-paying stocks with a yield of more than 3.5% are typically thought to be dangerous. The greater the dividend yield, the more likely the corporation has a problem. The dividend yield is increased by driving the share price down. You may look at the stock discussion on seekingalpha.com. to determine whether the dividend is at risk of being reduced. Before you decide to accept the risk, be sure you're an educated investor, even if you disagree with someone else's point of view. A decrease in the stock price is almost always the result of reducing the dividend. As a result, you lose both dividends and the value of your portfolio. That doesn't mean it happens all the time, so you have to decide how much danger you're willing to accept. After this, you're gonna have to determine which dividend-yielding stocks to invest in. Most dividend stocks have a quarterly dividend payment arrangement. Some people will pay weekly, some once a year, others twice a year, and others less often. To construct a monthly dividend portfolio based on quarterly dividend payments, you'll need to invest in at least 3 separate companies with distinct payment schedules. An investment portfolio of around $400,000 is required to generate $1,000 in dividends each month. It may seem like an absurdly large figure if you're not converting an existing IRA. Instead, start with lower dividend objectives like $100 a month and work your way up from there. Over time, keep investing and reinvesting to accomplish your greater goal. It's easier and more efficient to buy modest amounts of stock now that huge brokerage firms have reduced trading costs to zero. In addition to the fact that you'll need to invest in various firms to cover the entire year, $400,000 is a considerable sum of money. Purchasing shares in multiple firms allows you to spread out your risk. Investing in 3 equities means placing all of your eggs in a few baskets. If one of those stocks fails, a significant portion of your portfolio will be affected. To get a better deal on a company, you may diversify your portfolio by investing in many equities from different industries. Once again, I'd want to make this point. Regular stocks with high dividend yields may suggest an issue with the firm that lowers the stock price. Verify your company research one more time. Losing both dividends and stock value will be contradictory to your aim. Therefore, you should avoid doing so. Your decision to invest in a specific stock may or may not be influenced by your research. So don't be afraid to enter the market as a well-informed investor. To supplement your income or develop your portfolio on autopilot, earning $1,000 a month in dividends is a terrific option. You might make a dividend payment each month if you choose your stocks carefully. Be careful to do your homework upfront to verify that the opportunity is a good fit for your portfolio and your schedule and not simply the calendar. Remember to diversify your portfolio by investing in equities from various industries. To avoid having all your eggs in 1 or 2 baskets, consider spreading out your monthly investment target of $1,000 among a few different equities. Begin with what you have and gradually expand your investment portfolio. And don't give up if your first month's dividend income is less than $1,000. Now, guys, I'd love to hear your thoughts and ideas on building a dividend income portfolio. What are your thoughts and plans? Write them down in the comment section below and let's discuss. Thank you so much for watching up till the end of this video. As always, don't forget to smash that like, subscribe, and notification buttons to get updated on Capital Finance's latest uploads. I hope you learned a lot and see you in the next video.